Welcome to the Money Unleashed podcast, powered by the Hoffman Financial Group. I'm Eric Johnson. Joining me, as always, is Kyle Allyn. We're the vice presidents of Hoffman Financial Group. You can hear us each Saturday from 2 to 3 p.m. on 95.5 WSB and catch new episodes of the podcast each Friday, so make sure you're subscribed wherever you get your podcast. Let's jump into the show. We've got a lot to talk about today, and the first bit that I want to talk about are interest rate cuts, right? We've already experienced a few, and we've got a couple more coming down the pike, but there's a certain energy that's different around these interest rate cuts now than there was last year. Isn't that right, Kyle?
Yeah, so last year, every single time Jerome Powell came onto the stage, every single time that the FOMC decided to talk, it was like everybody lost their mind.
Right.
You know, I mean, if you go back to January of last year, there were people, I think Bill Ackman said that he thought we're going to get 7 rate cuts, and it was just every discussion was about inflation. Every discussion was about CPI. No, not so much. I mean, I'm not saying it doesn't matter, but it's interesting how people's emotions swing so drastically back and forth.
Well, it's funny because we looked up on Investopedia the number one Googled word last year, and it was inflation. Now it's almost like no one even cares any longer, and that's kind of an issue. I mean, basically it's about the greed of things, isn't it? I mean, let's talk about this for a second. Fuel prices are down 20%. But what's keeping the CPI number up? We got motor vehicle insurance is up 12.7% still. Why? No, I guess there's more, I guess there's more teenagers driving or something like that. But, it's just all of a sudden America wants more gains. And, it's not easy making money in the stock market, but, having double leveraged and 3 times leveraged ETFs on things, that seems a little excessive, doesn't it? I mean, we're seeing this every single day.
Yeah, I mean, at what point are you gambling? So I was looking at some of this, right? A new company just created a 2x leveraged ETF. So ETF, exchange traded fund.
Yeah. And
then leverage means that they're borrowing to increase the return. And they built one for NVIDIA and they built one for Tesla. Well, this year, NVIDIA's up over 160%. Tesla's up over 90%. I mean, at what point are you losing your mind? I mean, you need 180% return. You need 320, 350, 400% return in a year. Like, what is going on?
Well, everyone loves those 2 times leveraged shares, but that means they can go down 2 times as much as well, too, right? So, if NVIDIA goes up 10%, this ETF might go up 20, but conversely, that means you're going to lose twice as much as well, too. So it's kind of like you're rolling the dice in these very risky ETFs. And, I'd be happy with 163 or 92%. I'd be happy with all of that. Greed's what kills you in this world, right? Fear and greed is what moves people in the financial world, and greed can be a son of a gun. And we experienced fear for the past 2 years, but now I would argue that we're seeing lots of greed. People want to go all in all of a sudden, and what Jerome Powell has to say is still very, valid for what's going on right now. I mean, we're still trying to thread a needle, and we do have to bring interest rates down. We do have to get the CPI down. It's not going to be as easy as we think, and there's always going to be bumps in the road, too. I like to remind everybody that you don't plant a seed and a tree grows to the sun. So there are going to be ups and there are going to be downs. There will be, a 5 to 10% correction. So the moment the market turns around and we experience one of these little pullbacks, are you going to be one of the people lighting your hair on fire, or are you going to be buying into it, trying to gain more in your portfolio? It's a crazy question. So with all these crazy gains that's happening with all these different types of stocks, and we pick stocks for people as well too, so we understand that, but is there any sort of case that you would think that a bear market's coming?
So I read this tweet from Jason Goffert. He's a development of behavioral finance columnist. He also worked at Deep Haven Capital, and so one of the things that he was talking about that was negative, not positive, was this idea of market breadth, right? So market breadth looks at advancing and declining securities. So what you're essentially doing is a technical analysis technique that gauges the strength or the weakness of the moves of a major index. So when stocks are in advance or when stocks are in decline, it suggests a bullish or bearish take. So essentially what he's looking at is this idea of momentum. And so he's showing some real worries. And so one of the things I wanted to do with this was just look out a year from those moments. So I went and researched those moments, looked at when they happened, looked at where the market breadth was in this channel, and said, okay, what was going on a year later? And the answer was the market was up. So you have to be very careful, whether it's interest rates, whether it's everybody buying Bitcoin, or whether it's someone as intelligent as this gentleman saying that market technical analysis is in the wrong place. Sometimes it means something, sometimes it means nothing.
What it really comes down to is right now we've got tons of people understanding we just moved through a bear market and we're hopping back into a bull market, right? And we've been in a bull market for a little bit of time now. I personally believe we're 2 or 3 innings into it. We've got some more innings to go, but it shows the exuberance of the stock market and how people want to make money. And basically, to me, what I hear when you rip out all those amazing, notes from Jason is that, hey, are you the type of person when you hear something negative, you're lighting your hair on fire and hopping out of the market? And conversely, are you the type of person where, Bitcoin hits 100,000, you've got to, buy tons of it after it's, appreciated almost 10 times in a year? The bottom line is this, is you don't want to have knee-jerk reactions when it comes to your money. And you need to have a plan put together to make sure that you understand, you identify those feelings, because money's an emotional game. But you have to have a plan put together in place so you can take advantage of those. But for instance, I'm not taking every penny I have and dumping it into Bitcoin. And I hope,
and you're a fan of Bitcoin.
Yeah, and I like it. But you're not watching me take every penny I got and dumping into one thing, right? Like, you have to have a good plan around it.
I always tell people one of the most interesting things that I've learned doing this as a job. So this is a little personal about me.
Yeah.
You would think that what you learn being a financial advisor is to save your money and invest your money. And yeah, absolutely. We promote that. We believe that. You got to save, you got to invest. But one of the greatest things that I learned being a kid from a small town and then now having the opportunity to do well and understand money is that everybody's kind of messing with themselves in this concept of I need more, right? It's like, I need $1 million. Are you sure?
Right.
Oh, wait. Now I need 3. Are you sure?
Well, no one's come in here and said they want less.
That's right. So we all admit that we want more. That's an emotion. So one of the things that we help clients with is the logic, right? So I think what everybody wants is freedom. They want the ability to stop with the drama, stop with fighting the traffic, stop with going into work. And so you find freedom when what you have matches what you need in income. And then the emotion starts to go away. We see this with clients sometimes. They'll come in with a big pension, or maybe they got a lot of real estate and they say, I don't care about the stock market. I got what I need.
That's right. And if you've got a proper plan put in place, everybody, you can have that type of financial freedom. And what Kyle is alluding to is that you don't need $15 million in order to have a successful retirement plan. What you need is a plan. And if you want that financial freedom, especially when you're approaching retirement, it's all going to revolve around replacing your paycheck, right? So how do you do that? You got to have Social Security. You got to factor that in. If you're blessed enough to have a pension, you got to factor that in. And if you don't have one, don't worry about it, folks. They're going by the way of the dodo. But really what it comes down to is taking what you've saved and then creating an income stream that can supplement your pensions and Social Securities in order to create the lifestyle that you need. And here's the rub, though. You need to have a savings plan incorporated into that income plan. And everybody needs to have one in retirement. And that's what gives you the financial freedom to, A, live the life the way you want, and B, it doesn't take as much money as you think in order to achieve those types of income numbers. And whatever's left over, you could still invest it in a 60-40, 70-30 portfolio and still grow it into retirement without drawing your accounts down. It's funny. I have a client. I literally talked to them yesterday. Great couple. I've been helping them out for 5 years. And they are, we had a meeting last week, and the lady told me, hey, the husband's not working any longer. And the husband told me, hey, we would like to see an income plan, but we'll just call her Sandy. Sandy is going to retire in August. And I was like, okay, well, it's a little far out, right? Because a lot can happen between now and August. And we wrapped up the meeting. It was a good meeting. They're super happy with their portfolio. And then I got about 6 or 7 emails from them. And I called them back. I'm like, hey, is there something I'm missing here? And she said, Eric, I don't know if I can make it to August. And I was like, okay, got it. Talk to me about it. She goes, well, I can maybe make it to March because I need to get some surgery done. I'd like to have it done on my company's insurance, but I'm dying right now. Like, I'm working way too hard. I'm bending over backwards for this. And I said, Sandy, you got to get out of there. I was like, you're 68 years old. You fought the good fight. It's been 27 years that you've worked for this particular company. You got to get out of there. I was like, stress is the number one killer in America. Everyone thinks it's cancer and everyone thinks it's, heart disease. I disagree. I think it's the stress and how you deal with those stresses, which causes the cancer and the heart disease. And let me tell you something, everybody. You work to live. You don't live to work, right? You weren't born and put on this planet to go work for a company the rest of your life and then go be put in the ground. So you need to identify when it's time to leave. And right now her stress levels are through the roof. She can't sleep. She says she's barely eating. That's your sign, right? So I told her, hey, get your cataract surgery. Get back in here at the beginning of the year. August is out. We have to get you out of here. Let's create an income plan, and then that way you can walk away in March and April, and your income is going to be sound and coming in, and you don't have to worry about any sort of gaps. And that's why we always talk about replacing your paycheck. We do this for everybody every single day. If you need to have an income plan put together, please give us a call. We're happy to help you out. Give us a ring, 404-341-6767. That's 404-341-6767. Or you can check us online at unleashyourmoney.com and simply mash the button, replace your paycheck challenge. One of our great client service representatives will give you a call. They'll set you up with one of our fantastic advisors. Shoot, it might even be me and Kyle. Again, that's 404-341-6767, 404-341-6767, or check us out online at unleashyourmoney.com.